As of the 1st of January 2026, Nigeria is no longer operating under the old tax system. A completely new tax law is now in force. This is not a proposal. It is not a rumor. It is not something coming in the future. It is the law today. Whether you earn salary or you run a business or freelance online, sell on Instagram or work with foreign clients, the law affects you. Over the past few months, I have received many calls, messages, and questions from people asking things like, what actually has changed? Will I now pay more tax? Does this affect small businesses? Is FIRS still in charge? There has been a lot of information online and unfortunately a lot of misinformation too. So in this video, I want to give you clarity. No panic, no rumors, and not social media noise. My name is Chinenwale. I'm a finance manager, a tax consultant, and a personal finance coach. This video is the first part of a 7-video YouTube series where I will break down Nigeria's tax law in simple practical terms. What changed, what stayed the same, who it affects, and what you must know to stay compliant in 2026 and beyond. Let's start from the beginning. For many years, Nigerian tax system was fragmented and confusing. To properly understand tax obligation, you had to navigate over 20 different tax laws. One law for company income tax, another for personal income tax, another for VAT, another for withholding tax, and several others. Even professionals struggled to keep up. For the average Nigerian, the system felt overwhelming, unclear, and in most cases unfair. Many people did not want to apply them because they were supposed to pay more or they don't even know how much they owe. On the 26th of June 2025, that changed. On that day, the president signed 4 major tax reforms, and that fundamentally restructured Nigeria's entire tax framework. These laws consolidated the old scattered rules and made it clearer and more unified. The 4 laws signed are: 1. The Nigerian Tax Act, which brings together and replaces several existing tax laws into a single principle framework governing taxation in Nigeria. The second one is the Nigeria Revenue Service Act, which formally replaces the Federal Inland Revenue Service with the Nigerian Revenue Service and expanded its powers, responsibilities, and digital enforcement capacity. The third is the Joint Revenue Board Act, which strengthens coordination between federal and state authorities, improves information sharing, and reduces duplication of tax administration. The fourth is the Tax Administration and Enforcement Act, which standardizes tax procedures, compliance requirements, penalties, and enforcement processes across the country. These 4 laws officially took effect on the 1st of January 2026. What this means is that Nigeria has moved away from a fragmented tax environment to a system that is more structured, more digital, and more coordinated, and also more enforceable. One of the most visible changes is that Federal Inland Revenue Service, commonly known as FIRS, is now officially called Nigerian Revenue Service, or NRS. This is not just a name change. The Nigerian Revenue Service now operates a stronger digital tools, broader enforcement powers, and improved access to financial data. Banks, fintech platforms, payment processors, the Corporate Affairs Commission, and tax authorities now share information real time. In practice, this means that operating your bank account, operating payment platforms, or receiving income digitally is now automatically linked to tax visibility. However, this reform is not only about enforcement. One of the most important things Nigerians need to understand is that the new tax law actually provides significant relief, especially for low-income earners and small businesses. Under the new tax law, if your total income is 800,000 naira or less, you are legally exempt from paying personal income tax. This exemption is not a favor. It is not discretionary. It's written clearly in the law. Under the old system, many people earning small amounts were still taxed. The new tax framework deliberately protects low earners and ensures that tax starts from when income reaches a more reasonable level. For businesses, particularly small companies, the relief is even more substantial. Previously, only companies earning 25 million naira or less enjoyed certain exemption. Under the new tax law, that threshold has been increased to 100 million naira in annual turnover, provided the company's assets do not exceed 250 million naira. Companies that fall within this category now pay zero company income tax, zero capital gains tax, zero development levy. This is one of the most pro-small business tax reforms Nigeria has seen in decades. There is one important point many people misunderstand, and I want to be very clear about it. Registration is not the same as payment. Even if you fall below a taxable threshold, you are still required to register and file returns showing that you qualify for that exemption. Under the new tax law, compliance is about documentation, transparency, and proper reporting, not avoidance, not guesswork. As we go deeper into this series, you will see that the new tax law is stricter, yes, but is also clearer, fairer, and more predictable than what we had before. In the next video, I will explain exactly how this new tax law affects individuals, including salary earners, freelancers, consultants, and Nigerians earning income from abroad. I will walk you through the new personal income tax structure and show you with practical examples how much tax people now pay under the new system compared to the old one. If you earn income in Nigeria or you live in Nigeria and earn income from anywhere in the world, you should not miss that episode. So please like this video, subscribe to the channel, and turn on your notification so you don't miss the next part of this series. Thank you for watching. I'll see you in the next video.